All right, traders, what's going on? Welcome back to another YouTube video. Today, I'm going to be giving you guys three key things that are absolutely going to change your trading career. If you can find these three things in every single trade, you guys are going to make your life as traders a lot easier, and that's what it's all about. So let's dive straight in. If you guys are new here, welcome back. My name's Aaron. I've been trading for about 7 years, and we go live on YouTube absolutely every single day in the London session for free, 7 till 9 a.m. London time. So hit that like button, hit that subscribe, and I hope to see you guys on the live stream. So I'm going to be showing you guys a trade that I took last week, and it was probably my best trade of the week. And I didn't have many. And the reason that this trade was so good compared to maybe the other trades that were some slow break evens or didn't really do that much is exactly what I'm going to show you guys. So key principle number one, this is the most important part for me when I'm getting into a trade. Do we have a target where we need to see tapped before doing something else? In this example, you can kind of see here on gold, if I just replay and show you guys, this trade was taken on Friday in the Asian session. Now, what made this trade so good is the first principle is, if I'm looking for longs on gold, do I have a liquidity target? I have to have a liquidity target. Otherwise, if I'm just, let's say if this wasn't a liquidity level and this high here had wicked these highs, would I be taking longs just up into that resistance? Absolutely not. I need to have a key level where I imagine a lot of people will be jumping in shorts off this area, putting their stop loss just above this high, looking for this big play down. So key number one is clear liquidity targets. That goes for every single trade. Do I have a target that I can imagine most people are probably trying to do something and I want to take advantage of their stop loss? I have to have a target, whether that's resistance liquidity, support liquidity, trend line liquidity, either one, I have to have a level to trade into. Now, biggest key number two is, do I have a liquidity grab in order to be able to actually enter the trade? So I don't want to get trapped in on the wrong side and, most people are stopping me out before the real move. So in this example, if I want to see longs on gold, have we had a liquidity to the downside in order for me to have that move up? Because anytime gold is going to have a big move up or down, it's going to come and grab the lows, and then it's going to have that nice move. It's going to have a big push down, it's going to grab the highs, and then it's going to have that big push. So point number two is liquidity for entry. So at this point here, on the high time frame, if I push it forward, it's going to skip it. But on the high time frame, this was some hourly lows that needed to be grabbed. So fantastic. There we go. Amazing. So we have a clear liquidity target. We have a liquidity for entry. Now, does that mean you just start buying gold down here just because you want gold to go up? Absolutely not. And this is the third and most important part of this intraday trading plan, is a breakout with volume. That's also very, very big. So you can kind of see here on gold, what do we have here? We have a level of support. So if we want gold to go up, do we buy once price has broken below a level of support? Of course not. That makes absolutely no sense other than you're trying to predict the market. So if we want to go long on gold, boom, amazing. We want to see gold closing back above that level. And this is where I executed this trade on the 5 minute right here. Where's all our rules gone here? So I got long on gold on Friday in the Asian session. First entry around this high, stop loss down below this support. But if it re-broke that low, I would be out. Targets coming up into these highs for about a 36 tick trade. Absolutely amazing. So we have a target, we've had a liquidity grab, and we've had a breakout with volume. Fantastic. That's the three things that we need. Look at this, rejection again. More people jump in shorts. This is where I took another long position. And then, boom, there we go. People got absolutely liquidated. So if you jump on the charts and you don't really know where price is going to go, you can't really find some liquidity levels, and you're almost buying or selling into nothing, or there's simply just no volume. For example, you take a look at this. Do you start getting chopped up in here? Do you start getting chopped up in here? Do you start getting chopped up in here? Absolutely not. The biggest key is the volume. I have to see the volume come in, and then amazing. Then I can execute on the trade. So, and I'm going to show you guys my executions, my profits, everything like that here on my live account. But just to recap, number one, clear liquidity target. Know where you're buying or selling into. liquidity grab for entry. You have to have grabbed some highs or lows in order for you to take the trade. And number 3 is a breakout with volume. Volume is very, very key. If gold's in a tight range, drawing your highs, drawing your lows, wait for a breakout, fantastic, you can take the trade. Now, I'll just draw your guys' attention to my second screen right here, purely just for transparency purposes, so you guys can see. These were the positions taken yesterday here on gold. So made just over $1,100 in these two trades. So that was the original trade that was taken much lower, and then that's where I got my sorry, that was my initial trade there, and then that's when I got the much lower entry there. So these are the two positions buying gold up into them amazing liquidity levels. So I hope this video did help you guys, and I really also hope to see you live on YouTube absolutely free every single day, 7 to 9 a.m. London time. I'll see you guys there. Peace.